Alright, hello there. Welcome to what I can only assume is your desperate last-minute attempt to understand the glorious, shimmering and utterly terrifying labyrinth that is the American tax system. Yes, it's that time of year again, when the birds are singing, the flowers are blooming, and millions of you are hunched over your kitchen tables, mainlining coffee, and wondering if interpretive dance counts as a legitimate business expense. Spoiler alert. It probably doesn't, unless your business is in fact an interpretive dance academy. And even then, the IRS might raise a perfectly sculpted, skeptical eyebrow. But don't click away just yet, because today we're not just commiserating, we're arming you. We are diving headfirst, with the reckless abandon of a squirrel crossing a 6-lane highway, into a topic that can genuinely save you a significant amount of money, stress, and quite possibly, your sanity. We're talking about the 5 most costly tax mistakes that Americans, bless their patriotic tax-paying hearts, make year after year after year. It's a recurring national tradition, like arguing about pineapple on pizza or pretending to understand the stock market. But unlike those debates, this one has direct, tangible consequences for your wallet, your peace of mind, and your ability to sleep soundly without dreaming of stern-faced auditors. Think of this as your preemptive strike against fiscal calamity. A guide, if you will, to navigating the minefield of Form 1040 and its myriad menacing brethren. Because let's be honest, the tax code is written in a language that seems deliberately designed to confuse, a sort of bureaucratic Klingon that only the most dedicated or perhaps the most masochistic can truly decipher. We're going to translate some of that gobbledygook into plain English, or at least into something resembling plain English filtered through a thick layer of bewildered exasperation and the occasional well-deserved sarcastic jab. So, stick around. Seriously, don't go wandering off to watch cat videos just yet, tempting as that may be. Because by the end of this, you'll be better equipped to avoid these common pitfalls, these financial sinkholes that eagerly await the unsuspecting taxpayer. You'll learn how to sidestep the blunders that turn tax season from a mild headache into a full-blown migraine complete with flashing lights and an inexplicable craving for antacids. Consider this your essential survival guide to not accidentally giving Uncle Sam more of your hard-earned cash than he's legally entitled to. Let's begin this thrilling adventure, shall we? Our first major tax blunder, the absolute classic, the undisputed heavyweight champion of "oh crap, I forgot" moments, is of course filing your taxes late. Yes, that simple act of missing a deadline. It sounds so innocuous, doesn't it? Like forgetting to return a library book or being a few minutes late for a dentist appointment. Except, imagine if that library book accrued interest at an alarming rate, and the dentist charged you a percentage of your annual income for your tardiness. That's much closer to the reality of filing your taxes late with the Internal Revenue Service, an organization famously known for its jolly demeanor and forgiving nature. Oh wait, no, that's Santa Claus. My mistake. The deadline for filing your federal income tax return is typically April 15th, a date that looms large in the American consciousness like a particularly ominous dentist appointment you can't reschedule. And yet, every year, millions of people manage to sail right past it. Sometimes blissfully unaware, sometimes paralyzed by the sheer complexity of it all, and sometimes, let's be honest, because they were too busy re-watching that entire season of that show about competitive cheese sculpting. I get it, the allure of artisanal cheddar is strong, but the IRS, unfortunately, does not accept cheese-related distractions as a valid excuse for late filing. Now you might think, what's the big deal? A few days late, a week late, who cares? Well, the IRS cares. They care a lot. They care with the focused intensity of a hawk spotting a field mouse from a mile up. Filing late isn't just a minor inconvenience for them, it's an opportunity to introduce you to their wonderful world of penalties and interest, which we'll get to in horrifying detail shortly. It's like being late for a very important, very strict party, and the hosts don't just frown, they start charging you an entrance fee that gets bigger the longer you make them wait. And then they charge you interest on that fee. And it's not just about owing money. Sometimes you might even be due a refund. Yes, you heard that right. You could be late in telling the government, actually, you owe me money. And by filing late, you're simply delaying getting your own cash back. It's like winning a small lottery prize but then forgetting to cash the ticket for months, just leaving it in your jeans pocket through several wash cycles. The government is perfectly happy to hold on to your refund for as long as you let them, gathering digital dust in their coffers. So, punctuality isn't just polite, it's potentially profitable for you. Alright, moving on to our second costly tax mistake, the treacherous territory of incorrect deductions. Deductions. Those magical little lines on the tax form that promise to shrink your taxable income to shield some of your hard-earned cash from the government's grasp. They are the glittering, alluring sirens of the tax code, calling out to weary taxpayers, "Come save money with us, it's easy," and sometimes it is. Sometimes deductions are perfectly legitimate, wonderfully helpful, and entirely above board. They are your financial life raft in a sea of tax obligations. But here's the rub, and it's a big one. The world of tax deductions is also a minefield, a veritable swamp of confusion, misinformation, and wishful thinking. For every legitimate deduction, there are a dozen more that sound plausible in your head, but are, in the cold, hard light of IRS scrutiny, utterly ridiculous. Can you deduct your pet goldfish's existential angst therapy sessions? Probably not. What about the artisanal, hand-carved wooden spoons you bought because you felt they'd increase your culinary inspiration, thereby indirectly boosting your work-from-home productivity? Again, that's likely a firm no, unless you're a professional wooden spoon critic, which, let's face it, is a niche market. The temptation is understandable. You look at your income, you look at what the government wants to take, and you think, surely there must be ways to reduce this. And there are. But the key is legitimate ways. Claiming deductions you're not entitled to, or wildly inflating the value of those you are, is like playing Russian roulette with an IRS auditor. You might get away with it once, maybe even twice if you're extraordinarily lucky, or your claims are just boringly incorrect. But eventually, that chamber is going to click on a live round, and the consequences are rarely pleasant. This isn't just about honest mistakes, though those certainly happen given the sheer, mind-numbing complexity of the tax code. Sometimes it's about people getting a bit creative, a bit optimistic, a bit. Well, my friend Dave said he deducted his entire collection of garden gnomes as a home office expense, so why can't I? Dave, it turns out, may not be the most reliable source of tax advice, and Dave might also be enjoying a very detailed correspondence with the IRS. The allure of saving a few extra bucks can lead taxpayers down a perilous path, strewn with good intentions and very bad ideas. Right, so you've navigated the labyrinth of deductions. But now, we arrive at a magical part of the tax code: tax credits. Tax credits are a dollar-for-dollar reduction of your actual tax liability. It's like the government dropped to 20 on the sidewalk and you've just stepped over it. Billions of dollars in credits go unclaimed every year. Alright, let's talk about mistake number 4, a mistake so tempting, so alluring, it whispers sweet nothings to your inner financial anarchist: not reporting all your income. Yes, that little bit of cash from that side hustle, that freelance gig you did for a mate. The money you made selling artisanal birdhouses shaped like obscure British comedians. It all counts. The thinking often goes, oh, it's just a small amount, a pittance. Surely the colossal, all-seeing eye of the IRS won't notice this tiny speck of undeclared earnings. They're busy chasing billionaires, right? My paltry sum is surely beneath their notice. It's a comforting thought, like believing that if you don't make eye contact with a wasp, it won't sting you. Spoiler, it still might. But here's the rub, and it's a rather abrasive one. The IRS, bless their cotton socks and their insatiable hunger for revenue, very much care. They care with the focused intensity of a bloodhound that's just sniffed a bacon-wrapped tax evader. Their entire operational mandate revolves around collecting what's due, and what's due includes that income you conveniently forgot about. The argument it's just a little bit is precisely the kind of thinking that can snowball into a rather large, inconvenient and expensive problem. It's like saying it's just a small hole in the Titanic, what's the worst that could happen? We all know how that particular maritime adventure ended, don't we? Now, the explosion of the gig economy has thrown a delightful Molotov cocktail into this already flammable situation. Suddenly, everyone's a freelancer, an independent contractor, a micro-entrepreneur peddling their skills or their spare time for a bit of extra dosh. And while that flexibility is fantastic, it also means income streams are more fragmented, more numerous, and potentially more easily overlooked. Companies issue 1099s, yes, but the onus is still on to track and report everything. It's a system that almost seems designed to trip people up, like an obstacle course where the prize for failure is a sternly worded letter and a hefty bill. And the consequences, oh, the glorious consequences of this particular oversight aren't just financial. Though believe me, the financial sting can be quite something. We're talking about the gnawing anxiety of a potential audit, the sleepless nights wondering if is the year they catch up with you, the sheer unadulterated stress of knowing you've left a little fiscal time bomb ticking in your records. It's like having a tiny, undeclared gremlin living in your financial sock drawer, occasionally rattling things and reminding you of its presence. Far better to declare it, pay the piper, and sleep the sleep of the fiscally righteous. Or at least, the fiscally compliant. After tackling federal taxes, don't forget state taxes. State taxes fund local services like roads, schools, and law enforcement. Ignoring them is a financial misstep. Each state has unique tax rules and deadlines. Moving states or working remotely adds complexity. Penalties for ignoring state taxes are severe. Consult your state's tax resources to avoid issues. What you don't know can hurt you financially. Well, there you have it. 5 costly tax mistakes that Americans, in their infinite and understandable desire to think about taxes as little as humanly possible, make every single year. If you've managed to sit through this entire video without developing a nervous tic or spontaneously weeping into a pile of W2S and 1099s, then frankly, congratulations are in order. You are clearly a stronger and more resilient individual than I am, and possibly equipped with a higher tolerance for discussions about arcane government regulations. Or perhaps you just had it playing in the background while doing something far more enjoyable, which honestly is a perfectly valid approach. Now, if this video, against all odds and despite its rather grim subject matter, somehow proved to be even remotely helpful in your quest to navigate the labyrinthine, soul-crushingly complex, and yet utterly unavoidable world of American taxation, we would be enormously grateful if you could perform a small digital act of kindness. Please, take a moment to locate that thumbs up button beneath the video and give it a gentle click. Apparently, this simple gesture pleases the mysterious algorithmic gods who rule the YouTube kingdom, and much like the IRS, they are powerful entities whose favor we are keen to court. It helps others find this information, which is our main goal, apart from filling the void with content. And speaking of algorithmic appeasement and the dissemination of useful, if occasionally depressing information, if you'd like to see more content designed to help you manage your finances, untangle bureaucratic knots, or simply provide a momentary distraction from the relentless march of adult responsibilities, then please do consider subscribing to our channel. We aim to bring you well-researched insights, practical tips, and perhaps just enough wry commentary and thinly veiled exasperation to make the medicine go down a little easier. We can't promise to make taxes fun, because that would be a lie, and lying on financial matters, as we've just discussed, is generally a bad idea. Finally, don't forget to hit that little bell icon next to the subscribe button. This magical notification bell will ensure that you are immediately alerted whenever we unleash a new video upon the unsuspecting internet. Whether it's another deep dive into financial pitfalls, a guide to something surprisingly complicated, or perhaps just a mildly amusing take on the joys of spreadsheets. You wouldn't want to miss that, would you? Until then, try to put taxes out of your mind for a bit, if such a feat is even possible. Thanks for watching, and we'll see you in the next video. Hopefully, it'll be about something a little more cheerful, like, I don't know, the mating habits of the Patagonian toothfish. Anything but taxes.